Hi guys, welcome to a video edition of Wealthbytes after a long time. I was actually waiting for the dust about the elections to settle and to see the reaction of how the market has taken this election fever, I would say. Right, the FIs have bought close to, I'm not so sure, 1 or 2 billion already post the elections. I mean, they're buying like crazy. This tells me only one thing, that although the GDP is growing at a very abysmal 6%, the market has discounted the political stability and the 5 long years that this government has and are very, very gung-ho and optimistic about the future. At least 50% of your disposable savings, apart from gold or fixed deposits, should go into equities, and this is the right time. Please buy in a staggered manner. Now, what do you buy? The strongest sector performance-wise has been the banking. So let's say about 45% of your equity investment should be in the banking and financials, NBFCs, select NBFCs. 15% into consumers, 10% IT. I earlier used to say 30%, now it's down to 10, and 30% is a mix of industrials, autos, and commodities. Take a risk on small caps and mid caps. Come on, have some fun, because the roller coaster ride has just begun. I have my friend with me, technical analyst Anil Singh Pandey, and I have a lot of questions to ask. So I invite him onto the show. Hi Anil, welcome back to Wealthbytes.
Thank you for inviting me.
Most welcome.
Hi friends. So after a big long gap, thought let's have big excitement and then let's do the show. So everybody was quite busy with election mood and nobody was in a mood to listen to markets and buy something, because nobody wanted to believe that there would be a thumping majority and the markets would cross the 12,000 major hurdle, which was considered as for the past 2 years since 2017. Now we are well above 12,000. Sensex has conquered 40,000. So markets are here to go for a newer high, and that's the next Everest to be summited by the markets, and that would be about 12,800 to 13,000 plus. Yes, 13,000 plus in the sense around about 13,200 could be the max what we are having the calculations according to the technical analysis by this Diwali.
Wow. Okay, Anil. Let's just say that there are two types of strategies to follow in this market. One is keep buying stocks on declines that are making 52-week highs. Like I have a list of 5 stocks. I cannot list so many. I don't want you to go into levels now. It's going to take a lot of time. Let's try and talk other things. So these are Reliance Industries, Siemens, Titan, Axis Bank and DCB Bank, because I said 40% should be financials. I would also like to add an RBL Bank if somebody likes to have some fun, because it's a very volatile share. Federal Bank in the mid-cap sector, because again this is on a, I don't know, it has crossed its 200 DMA types. This is the sector which is outperforming. These are the stocks which are outperforming the market. On the other hand, I am a buyer today of metals, autos, auto ancillaries, fertilizers, etc. Cement, I think it's too late to buy them now, maybe on a decline. Is this the right kind of strategy? Because there's a lot of risk in buying Ashok Leyland, Maruti, RCF, Russian Chemical Fertilizers, those kind of stocks, United Phosphorus, NMDC, Jindal Steel. I would like to buy all of these, Vedanta, because they are beaten badly. They had a bad quarter. but I'm sure they're going to do much better, and this China thing can't go on forever and ever and ever. Things have to change. What do you have to say?
In fact, this is an advantage. It is an opportunity in disguise to India. If India, US and trade war, China and trade war goes on, because even today morning in BBC World News, South Korea is the fourth largest economy in the world, and they too have taken a beating because the China is getting directly affected, and indirectly South Korean products were also getting very badly hurt, especially the automobile sector. 0.4% was the jolt which happened to the South Korean economy. But the twist here is the Indian economy hasn't taken a major beating yet so far. If all the concessions, all these special statuses is being removed even by US, we have a huge market to follow on. Why? Because China not only exports to America but also to many more other countries. Like you have the entire African continent, you have the European, some of the nations, and in the Asia as well. So India too has got some good big market share, wherein for India it's not going to be very difficult when it comes to the exporting market. Like even in US, India can take an advantage and stay ahead over China. Now let's forget about all that. Now coming back to the Indian markets, there are some different sectors which are going to be the dark horses, the outperformers, at least for the next 5 to 6 months. I'm just going to read out a couple of the names. It's a long list, not just a couple of names. So these stocks names have this checklist with you. Whichever you like, you can go ahead and buy. Now, sir has already given the top 5 front runners, the blue chip stocks. Now, I have a couple of large caps and few mid caps as well. So just let's check their names first. Now, coming to the first stock that is Century Textiles, Federal Bank, Hindustan Petroleum, ICICI Bank, L&T, PNB, UPL, JP Power, Canfin Home, Manappuram, DCB Bank, Triveni, Havels, Bata, Edelweiss, Bajaj Finance, Sanghi Industries, NIIT Tech, you have Just Dial, A to Z Infra, Bajaj Finserv, Muthoot Finance, Talwalkar, TTML, BEL, Dwarkesh Sugar, Ruchi Soya. So these are the stocks which are the dark horses, which will be the outperformers at least by 20 to 60% on a higher side, and play these stocks with a stop loss below your purchase price. I would suggest don't try to time the markets, but try to buy them in some good corrections mode, because you will be closer to your stop loss. Say around 10 to 20% would be your stop loss, and around about 40 to 60% or even higher if we expect around 100% kind of return. That's the kind of possibilities we are looking at. So trade with strict stop loss is my suggestion.
So I'll pick Just Dial for sure. Fantastic story. Heavy FII buying. I will also pick Triveni Engineering. Fantastic sugar stock. Apart from Triveni Engineering, you can buy a stock called Awadh Sugar on every decline. It's going to be 1,000 rupees. UPL for sure. Apart from that, Manappuram and Muthoot, both excellent stocks. Federal Bank, these are the stocks I remember among the list you made. So I don't know about Talwalkar. It's been beaten bad, really black and blue. Go out and buy Ashok Leyland, buy Jindal Steel, take a little risk. You're not going to lose. Just buy these stocks. Have a mix of risk and safety. A mix of small and mid caps, like Anil said, and the large caps. And make sure that you have the right sectors and the right strategy. Because, you said that by Diwali we should have an index of 13,000. What's the downside to this market now? What's the new floor?
11,000 has already proved its worth, that it's going to be the strongest support. Now you can only expect 11,000 either to touch or to breach. Something catastrophic should happen in this world. Otherwise, these levels cannot be reached if the bear market doesn't start.
Okay. Now, the market has been climbing every wall of worry, and we've been very lucky that whatever has happened, oil, Trump, the talk of nuclear war, Iran, China, the market has managed to climb every wall. Each time each time the market has gone to 11, it would come back 3 times, 4 times, come crashing down. It did the same this time when it touched 12,000. I think it did it thrice.
Yes.
And now it has finally managed to stay above 12,000.
Yes.
So the next event I think is 12.5, and then up down, up down, up down, and then maybe 13 by Diwali.
Yes.
So guys, I don't know how much time you've taken. If you have more time,
We have already taken 9 minutes.
so let's start wrapping up, and I leave it to you to finish off.
So we have the new government's budget in the first week of July. So there are a lot of expectations from the budget, because the layout for the new governments for the next 1 year, financial year, if we are talking about, hopefully March, April and May is done. So June to next March would be around about 10 months budget. So it's going to be very aggressive. There's a new ministry in place. So we are expecting some big kind of a Diwali on the budget day itself. There would be a big rally according to the sources. So let's wait and watch, and of course buy the stocks, any stock, either these names or even Mr. Ajay sir's names, stocks what they have been mentioned. So trade with stop loss, strict stop loss, and definitely the upside is not capped at the moment. It could be 12,800 to 13,200. So these are the levels to be watched out by this Diwali end.
Okay guys, I'm wrapping up. If you are a trader, please use stop losses. If you are an investor, diversify your portfolio. Don't worry about stop losses. I will tell you to get out of a stock if there is a special need to do so. Otherwise, buy, sit tight, sleep right. You're going to make a lot of money.
Thank you for watching.
Bye bye.